Hi friends, this is Bilal Haider and this is my another Forex trading strategy which I'm going to show you in here. This is not a very complex one. This is very simple based on simple maths and yeah. So let's start. So what this strategy is actually, it is actually consisting of two strategies, actually the same strategies but running parallel. Okay, so the first one is here where this one is only buy trades, okay, and this one here is the same one but only sell trades. Okay, so what it says, actually it says that this strategy has a fixed target. Okay, let's say 100 pips or 200 pips. Okay, so let's say if you're trading some currency pair and it has about 200 pips change in a week in one direction, so you will choose 200 pips as your target. Okay, if you're trading a currency pair that moves around 100 pips in a week or in a day, then you will choose that much pips as a target for you. Okay, and this strategy comes with each of your trade will be having 20 pips stop loss, and it will also have a 20 pips trailing stop. Okay, and there will be a limit to maximum number of trades here. In this particular example, I am using 5 maximum trades. Okay, this example is shown here is having 5 trades, 5 maximum trades. Okay, so let's start. So when you start trading using this strategy, you will be actually doing it using an expert advisor, but you can also do it manually. That will be a hard job by doing it manually, but yes, you can do that. So when we start using this strategy, actually we start by a buy trade as soon as if we are using an EA, that EA should place a buy trade with 0.01 lot size. It will be having 20 pips stop loss. It will be having 100 pips take profit value, and it will be having 20 pips trailing stop loss. Okay, so when you have placed your first trade, which is a 0.01, we are discussing the best case scenario here in this particular example. Okay, so when we will place our first trade with 0.01 lot size, and if market is going in our favor, let's say 20 pips, what it should do, the EA or you should do, you should place another trade, same buy trade with 0.02 lots. So at this point of time, what you will be having, your first trade will be in $2 profit, and your second trade will just start. Okay, forget about this part here, we'll discuss after we discuss this part. Okay, so at this point of time you will be in 20 pips profit, as your first trade will be having 20 pips profit, and your second trade will start right here at this point. Okay, we are discussing the best case scenario when we are moving towards our target of 100 pips. Okay, we'll discuss about average or worst case scenarios after we discuss this one. Okay, or you will be able to figure out those cases by yourself after you will learn this one. Okay, so let's say the market goes another 20 pips in our favor. At this point we will be having $4 profit for our first trade and $4 profit for our second trade, because it will be in 20 pips take profit, and our first trade will be in 40 pips take profit. Okay, at this point of time we'll place another trade with a 0.04 lot size. Okay, so at this point of time you are in $8 profit and you have placed your third trade. And similarly, after every 20 pips market going in our favor, we'll place another trade and we'll place it with double lot size. Okay, so that's how we'll continue placing our trades, and as soon as our 100 pips target for our first trade will be executed, we'll close our first trade and keep this sequence running. Okay, we'll be having stop loss values, 20 pips stop loss for each of these each of these pairs, each of these trades actually, and we'll also be having 20 pips trailing stop for all of these. Okay, so in case our first trade closes at 100 pips profit, and our second trade let's say reaches 110 pips and market reverses back to like 90 pips, it will be closed at the trailing stop, because our trailing stop is 20 pips. Okay, and similarly all of these trades will either close at take profit values or stop loss value, which is 20 pips, or they will close at trailing stop values. Okay, so this was pretty much very simple trading strategy, and this is the first part of it, and I have written these numbers here which help you to calculate how much profit you will be making if the market is going in your favor and you're using this strategy right here. Okay, so I'm not including spread costs, slippages, etc., but you can see how the overall strategy looks like. Okay, it is described here. Okay, now the second part of this strategy is pretty much the same where instead of buy trades we start with sell trades. Okay, and if you're running these two strategies parallel, like you started the buy EA and also the sell EA at the same time on the same currency on the same time frame, this EA will place a buy trade with 0.01 lot size, and this EA will place a sell trade with 0.01 lot size. So they will place the same lot size trades. Okay, why we are running these two parallel? Because if market changes its direction, or if we have placed a buy trade EA, which is placing buy trades on every 20 pips market moving in our favor, and market suddenly changes to a bearish trend, or market is going down, and what this EA will do, it will keep on placing buy trades every 20 pips, and you will be losing continuously $2 if you're placing your first trade as 0.01 and 20 pips target, so 20 pips SL actually, so you will be continuously losing $2 on every trade that this EA places. Okay, but when we are using both of these strategies together, what will happen actually, one EA will continue opening trades with higher lots on every single pip, every 20 pips change. Okay, and the other EA, which is a sell EA in our case, will continue opening a sell trade after every 20 pips the market is going against it. Okay, so this will be placing 0.01 0.01 trades, and this one will be placing 0.01 0.02 0.04 and so on. Okay, what we why we are doing this, because if we are placing a trade, if we started trading, let's say we started with a buy trade and market started going down and down, what will happen, this EA will start placing 0.01 trades and it will be closing at -2 -2 -2 -2, but the other EA, which is this one, the sell one, it will be doing this thing on the other side of the market. Okay, so if one side is losing, like every 20 pips it is losing, the other side will be gaining. Okay, so this side is, in our case, this side was gaining and this side was losing, but the losses are very low compared to the profits. Okay, by the end of this sequence, this 5 maximum trade sequence, you have ended up with $114 profit. Okay, and if you remove spread costs, you will be around let's say 110, maybe less than that, let's say $105. And if you will subtract these losses also from this profit, you have like 1 2 3 4 5 to the 10, so you remove $10 from that also, you are still in $95 profit. Okay, so why I'm sharing this video with you, that you should also learn about it, and take a piece of paper and a pen and write down all the cases where you have a best case where market is going in your favor continuously and it ends up in profit by reaching your target. And the other cases will be what happens when the market is not trending in one direction but it is ranging. What will happen at that time? At that time, actually, if one trade is losing, let's say this one, like market started with 0.01 take profit, 0.01 buy and 0.01 sell. At the same time, if one trade is making profit, the other is losing the same amount. Okay, so if market is trending in one direction, like the case in our hedging EA, when the worst case was the ranging market, but in this video, in this trading strategy, the worst case is not the ranging market. Okay, because if one trade is going in your favor, the other is going against you. If the other is going against you, the first one is going in your favor. Okay, so you will be paying the spread costs during the ranging markets only, and you will not be making huge losses like in our hedging strategy. But that has its positive things in that. And also this strategy is a different one, so I suggest you also try it and let me know what you think about it, and let me also know if you find any use case, like what will happen if this sequence ended somewhere between like after second trade or after third trade or after fourth trade and without reaching our target. What will happen at that time? You have to figure it out by yourself and let me know what you found. Okay, but as I think this is very profitable, and I will be soon making some expert advisor from this strategy. I'm just waiting for a sponsor for it. So anyways, I hope you like my video, and this was after a very long time I posted a new trading strategy on my YouTube channel. So I will be expecting some likes, some comments, and some shares also. So thank you for watching my video. I hope you like it, and I hope you learned something from it. See you, take care, and bye bye.